We're currently seeing a deleveraging occur. This is pre the FOMC meeting, which is coming out later on today, and the market is de-risking ahead of that. And consequently, you are seeing an absolute massive wipeout over here within a lot of the altcoins. This is mostly going to be high leverage traders. At this point of the crypto cycle, it's always advisable to rather stick to spot trading as opposed to opening up high leverage trades. Anything above a 5x leverage at this point, you've probably been absolutely rinsed in this market over here. With just a small pullback occurring within a lot of the cryptos, and you're seeing almost double digit towards the downside losses across the board. And if you actually look over here at the liquidation delta, well, you can see a lot of longs are starting to get wiped out, especially more recently in the last 4 hours or so. About 100 million worth of longs taken out over the last 24 hours. We have 335 million. Now, this is nowhere compared to what we previously saw, where we had the $1.7 billion liquidation event. But when we do typically see these mass liquidations like we saw back then, what tends to occur is you have price continuing to chopping players in and out of positions as things reprice and start to get ready for the next major move. Now, we're still on the cusp of that next major move. And the question is, of course, is it going to be up or down, right? The market has really been on a knife edge for a long time, where every single weekly closing candle is vitally important, where bears are basically just peeking over a cliff, ready to drop price down. And if bulls maintain those pivot levels, what tends to happen is price continues to soar, right? Because it's a strong, momentous move. The way that you can think of it, it's almost like a bullet train that's running on a train track. And every time the train track starts to slightly turn around a corner, you know, the bears are about to take control and the train's about to crash, for bulls to only just hold it narrowly on those train tracks and continue that powerful move. That's kind of the way that I think about it with these markets, and that trend continues to persist. So eventually we are going to get an absolutely monumental flush towards the downside. I'm talking about like 50% down on most of the altcoins, possibly even 60%, and Bitcoin probably putting in like a 30 to 40% drop. But is that time right now? That's a question. Stay tuned until the end of the show as we attempt to address this, and we have a look at a whole lot of different things. Well, also make sure you subscribe to the channel, right? If you're not subscribed, do subscribe, because we have irregular streaming times on this particular channel. Make sure you hit the bell notification. This is not Crypto Banter, but Crypto Live. Of course, my regular streaming is on the Crypto Banter channel, but occasionally from time to time, I'll be over here on Crypto Live. So if you want to make sure you don't miss these shows, then smash the bell notification and subscribe at the same time, so you'll be notified anytime that we do go live. All right. Looking very, very quickly at the stock markets, Dow Jones Industrial Average has now pulled back to the levels that we looked at a couple of weeks ago. There is still a CME gap, which is down here, or futures gap at least, not CME, but a futures gap that is coming down at the bottom. That's 42,500. If you do lose the yellow line and you drop into that box over there, you can consider that gap filled, right? That's an inefficiency within the market. And oftentimes you'll come back and capture some of that liquidity over there. If you look at NASDAQ, well, NASDAQ's levels of major support are way down. This is still this has been pumping up very, very high. You know, that's 6.8% down. This is trading pretty much at all-time highs. Yesterday, the NASDAQ closed at yet another all-time high over there. So we just need Dow Jones to bounce over here and start to play catch-up. And you are coming theoretically into major support. You have also the S&P 500 E-mini futures chart over here. A little bit of a futures gap just below where current price action is, but nevertheless, pretty much also at all-time highs. Now, if I were entering with fresh capital and liquidity into the market right now, I'd be very careful with what I'm allocating to. But there's two positions that I would be willing to take, which I think are relatively safe bets and probably an easy way to double your money in pretty safe fashion, right? The two coins, or not both coins, but the two charts that we'd look at would be these, right? First one I'd look at over here is Coinbase, right? Coinbase over here, putting in an absolutely perfect cup and handle formation, just like we saw on all the other charts. We saw this on gold, we saw it on the S&P 500, we saw it on the NASDAQ, we saw it on Bitcoin, we're seeing it on Ethereum as well, as Ethereum attempts to break out. And then you have Coinbase stock doing exactly the same thing, right? Coming into the neckline right now. Once you break above this level, this becomes a pretty safe, easy double, right? If you look at that, taking it to the measured move over there, 115% move. So maybe you're new here, maybe you're just entering into the market, maybe you're looking for something to buy. If you do have a brokerage account, well, that's probably the best place to get Coinbase as a stock. And remember, by buying Coinbase, you're taking a safe bet on the overall altcoin season, which the degens are frothing at the mouth waiting for, right? The much anticipated altcoin season that they've been talking about for years and years and years now. You typically get that altcoin season, but it only lasts for very short amounts of time, anywhere between about 3 and 6 months, right? That's where the majority of the gains have been made. So if you're somebody that wants to play it safe, you're cautious and you want to bet on that altcoin season, but you want to simply take a safer trade, well, you can bet on the picks and shovels, right? As opposed to looking for the actual gold amongst thousands of different coins, hundreds of thousands, possibly even millions of altcoins that are out there. When you consider how many meme coins are out there, Coinbase would be the play, right? This is the picks and shovels. This is where, if that much anticipated altcoin season does come into fruition, which I do believe it will, we'll talk about that in a moment, where is your retail going to play, right? They're going to come onto things like Coinbase, one of the most trusted trading platforms out there, and therefore you can buy the Coinbase stock as their revenue goes up, which, trust me, since we run a crypto business, I can tell you this for free, the revenue is going up, which means when eventually they have their next earnings reports, the stock price is also going to go up, because if our earnings are going up in a crypto business, their earnings are definitely going up, and therefore you can expect that Coinbase becomes an easy 100% trade. You want to double your money? There's one for you over there. Perfect cup and handle formation. You're creating a little bit of an order block over here, which is prepping for the next move, right? So once you start to leave this yellow block over here, it becomes a little bit too late to enter. And at that point, you are in a trend in motion, ready for $671 price level for, of course, Coinbase. Okay, so that's one. Number two, Ethereum, right? That would be the next one that I'm looking at. Look at the similarities between these two charts. I'll just flash it back and forth. Big cup and handle formation, ETH, big cup and handle formation, doing the same thing. Identical, creating the little bit of an order block. So again, if you want to bet on that altcoin season, bet on the biggest blue chip of the space with the most developers and, of course, the most history when it comes to one of the altcoins that's had staying power, right, is, of course, Vitalik Buterin's Ethereum. This is your next blue chip pick. If you don't have a brokerage account, you can look at something like this, right? Going for this one's probably a sensible approach to take, because also you can see if you are looking for one coin to outperform Bitcoin, it's going to be Ethereum, right? As we've been watching this for many, many months now, looking for a bottoming formation. And we did actually put in our risk to reward trade over there. And you're basically coming back towards the entry point. It does take time, right? Remember, following very, very long, strong downtrends, it takes a little bit of time to reverse that momentum, but we're looking for that reversal to come into 2025, which means if you want to make more Bitcoin, this is a good way to do it. You can almost double your Bitcoin holdings, right? If you're looking at 100% move over there versus putting $1 into Bitcoin, you can put $1 into Ethereum, and basically you'll come out with twice as much Bitcoin probably by the end of the cycle. So there's two options for you, right? Two options for you. Of course, ETH is rejecting from the all-important yellow line over here. Why the yellow line? Well, this is where the previous tops were put in place. But going back to this chart, you can see the formation of the handle portion of your cup and handle, right? So we are looking at that over there. And we said as soon as you get a weekly candle close above this level, you know it's onwards and upwards. You're going to expect rapid price appreciation. And personally, I wouldn't want to wait for that confirmation. I'd rather look to establish positions into this low region as you do form and create that little bit of an order block into this lower zone over here, right? So that's one thing to look at. Next thing to look at, of course, is the momentum behind Bitcoin on the 15-day time frame as well as the monthly time frame. We did speak about this. Monthly stochastic RSIs are still trending towards the upside. Volatility is only just moving towards the upside once again. But nevertheless, this has been a powerful move. It's been a strong move. We're always anticipating way ahead of time, establishing the final long positions over here at that wick low that came at $49,000. And we're expecting a powerful November. And that was easy to see because we just look back at the previous data to see what Bitcoin typically does over those November, December periods. November was always going to be big. December was probably going to be a little bit more of a pause and consolidation. And that was going to filter through into Ethereum, which we'll look at just now as well in terms of the seasonality. And that's why we expect that, this current move right now that we're seeing with a little bit of a pullback in the short term leading into the FOMC could, of course, be, just a bit of a false move. Oftentimes we see that de-risking leading into the event. Usually it's more of a warning sign if before the event takes place, you're absolutely pumping. That oftentimes sets the trap, meaning that bulls are going to get trapped, price is going to smash towards the downside. This increases the probability now that because we're pulling back now, it's actually a good thing, right? So we'll keep an eye on that. In terms of trajectory, trajectories. Well, this is the trajectory from the previous cycle, right, that we followed all the way back in 2020 and 2021. I'm just wanted to have a look at this now in terms of December over here and just relate that. Actually, I'm just curious. I'm just thinking about this right now. Where were our momentum oscillators? Where were the volatility indexes in December? If we mark out December, well, at that point, you can see you were already very, very high up, right, on your volatility index. If you look at my cursor over there, you were also already topping over there. So maybe we still actually, in terms of trading, if you compare to the prior cycle, maybe we still actually somewhere more like here, right? So we still have this whole leg up over there, which means that you can reach those targets around, $125,000, $150,000 within that region. Cyclically, everything is following according to plan. Here it is. This is the purple line over here flashing on and off the screen is cycle 5, market cycle 5. That's the current one that we're in. And just zooming in, right on track. We can, if we follow more like we did in cycle 3, which was 2017, then you would expect more just a slow grind right now. If we follow more like 2020, into 2021 cycle, the green line, well, then you expect rapid expansion catching up to this. But nevertheless, this is what you have to look forward to. We are about 60-ish, 65%-ish away through this current market cycle, just to be clear, meaning that you are late, but you're not too late, which I've spoken about a few times. Remember, where do you start to become too late? Well, when we start to close above $4,000, when ETH starts to take out its all-time highs just shy of that $5,000 mark, that's probably the point in time where you want to stop allocating to crypto, stop putting new money into the market, but rather position yourself with your profit-taking strategy. How are you going to position to possibly exit the market, right? Those are the kind of things that you want to look at over there. So that is the trajectory. And if you actually have a look at this tweet over here from Ali Charts, right? He says, if Bitcoin does actually behave like it did in 2017 and 2020, then there would be a brief correction after reaching that $110,000 mark, which is just where we've been now, pretty close. It's close enough in my opinion. And then you would expect a steep correction after hitting $125,000 and a very big correction after hitting $150,000, and then you would end the bull market at about $220,000. That is if you do take out and you measure the percentage moves that we've seen comparatively to what we had in 2017 and 2020. That could be the expectation. My personal expectation is that I would find it hard to believe that we'll see Bitcoin trading over $200,000 within this cycle. I think it's possible, of course, but that's kind of where I get really, really cautious. And I have seen that prices can run in these bull markets, right? It surprises everyone, right? It makes bears absolutely capitulate and bulls get even more euphoric. So anything can happen. We'll keep an eye out on that. Volatility is still low enough when it comes to at least Ethereum and Solana that you could see ETH trading up to $10,000 plus. You could see Solana trading into about the $600 territory, which, similar to the Coinbase trade, presents a favorable risk to reward opportunity on both Ethereum, Solana, and Coinbase. These are still decent options. We're still waiting for Total 3. Total 3 refers to the altcoin index. This is a chart that measures what the altcoin index overall looks like, measured against Bitcoin, which ultimately, if it's going down, it means you're losing money against Bitcoin. Bitcoin is the safer, better bet, but we are starting to see signs of reversal over here with an official break of structure, as we have covered previously, putting in the very first high, and we're currently trying to set in a high-low, while simultaneously volatility is only just starting to turn towards the upside, right? Meaning that there's still a lot of momentum that can come behind this trade over here, and that's all in agreement with what we're seeing, of course, on Coinbase as well as on ETH, right? When Coinbase starts to take out those highs, when ETH starts to take out its all-time highs, that's where you expect that the total cryptocurrency market cap, or Total 3, the altcoin sector, is really in a strong trending move. And again, that's where you want to position your mindset from allocating new money to now looking at profit taking. Just to be clear, I haven't taken profits. I'm still in the market entirely. Just in case there's any confusion out there, I always try and be honest with you guys and share exactly what I'm doing with my own portfolio. But there is obviously some concerns, right? We'll get into what some of the concerns look like now. One of the concerns is we are going into a seasonal time where the volume typically drops, and we are monitoring the daily exchange volume. And this is a very critical area where you theoretically want to see it bounce. Now, because we're going into the Christmas time, the holiday season, a lot of people are, of course, not going to be looking at the charts, not going to be trading. That means volume will drop off, and it makes it for easy manipulation. If market makers want to come and manipulate price, or any sort of a big player wants to come and create a massive sell order to artificially drop price down so that they can reload and enter bigger positions lower, they can, of course, do this. The lesson over here is remain out of leverage as far as possible, right? Try not to take on high leverage trades. I mean, even a 3x leverage could potentially be at risk in that type of low volume environment where you could risk getting liquidated. The problem is that if there is a apathy within the market and a lack of volume, you could see a drop in the altcoin sector. Now, historically, we do see Q1 is pretty good, right? So if there is a drop over the next coming weeks, over this Christmas period with low volumes, I would expect that would quickly get brought up again in the new year. So it does probably present an opportunity more when establishing spot positions. Remember, you get spot trading, which means you're just purchasing the underlying asset, the same thing as buying Tesla, Apple, Microsoft, Google, etc. It's like buying the actual stock. This is just to clarify for the newbies. And then you get leverage trading, which is using financial tools that help to at least magnify or extend the amount of volatility that you get in the market. If you're using leverage, there always is a risk of liquidation. So I think if you do get apathy within the market, a drop in volume, that presents a buying opportunity, right? We are, of course, waiting for the Fed FOMC today. Remember, we want to see what they do over here with their total assets. And if this does start to turn a corner, you can see it is flattening out, right? It's definitely flattening out over here. This could be the first sign that maybe they are going to change their terminology within the FOMC statement from having been very restrictive to more looser monetary policy, and they should change the terminology from essentially selling assets to now adding assets to their balance sheet. If they do that, that has previously signified every single prior altcoin season. So I'll be able to update you on that tomorrow or on Twitter as well. Follow me on X. There's a link in the description below of this YouTube channel. If you go into the description, you should find my socials over here. Let's just quickly see where exactly is the socials. Where is the socials? Do we have the socials over here? Somewhere here. Oh, there it is. Host channels. There we go. Go through to my channels. Follow me on Instagram. Follow me on Twitter. I will update the relevance of that as soon as that FOMC statement does come out later today. So we're waiting for that. We have the perfect timing target that we outlined already back on Monday. We used this as a trajectory line, suggesting that we should see Bitcoin dominance hit this trend line, or the moving average, exactly on Wednesday, perfectly in time for that FOMC statement, which is coming out today. And we got that, right? Spot on, exactly 100% correct on that. Now the question is what happens next? In an ideal world, we reject, right? In an ideal world, the Fed add back assets into their balance sheet, and you do see a big drop over here in Bitcoin dominance. And that dominance can attack this trend line over here where these lows were and hopefully smash through that, as opposed to creating a double bottom. Hopefully you just break straight through that and it's full-blown altcoin season. And tomorrow the false move is confirmed and everything is absolutely giga bullish, moving towards the upside. Now, of course, if you do start to break above the pink line specifically, that was your mid-range of the overall move that we've had. So that is your 50% level, which is a very significant zone. Generally, you're weak if you're below it, you're strong if you're above it. So if you are bearish, you probably want to see Bitcoin dominance reclaim that level, which means the market is selling off and moving to safety, moving out of altcoins into USDT and Bitcoin dominance, right? I'm sure that for the most part, people want to see continuation of the bull run. I'm sure nobody's sitting here saying that, I've made enough money, I want out. I want everything to crash. I think very few people want that. So you're probably looking for a rejection over here, right? But always remove your biases and be honest with yourself, right? In the short term, we did outline, you are putting in high lows. This is a low time frame chart, a 4-hour chart, but you need to understand the way these low time frame trends tie into the high time frame trend, right? So that's your low time frame trend. But if you go into the high time frame trend, well, it's stopped. It's started to weaken now, right? We've had a very powerful uptrend. We came to the exact levels that we were looking at. That was your order block that led to the breakdown. We literally planned this trade ever since the lows over here in September 2022, and we started to move up. And we said 60% dominance was very, very likely. We hit that 60%. We wicked directly into that zone and started to break down from the falling wedge now, or rising wedge. Rising wedges are inherently bearish chart patterns, and when they break down, you expect it to play out something like this, right? an initial drop, you find support somewhere around the range quarterly, which more or less we did. You create a bounce, you test the underside as resistance, and that is your final buying opportunity into the altcoin market. And then you lead into your big drop, your massive drop, maybe one more bounce there, and then finish through all the way back to the bottom of the trading range. That's kind of the picture of what you're looking for. And if you do get this, this is essentially, this is your altcoin season, right? This is where your altcoin rally tends to take place. I do want to remind you, for a safe trade, look, you can just go to Coinbase, you can just go to ETH. If you're conservative, you just want to double your money, that would essentially be the trade, right? And we have seen this previously. If you go look back over here, again, these are the moves, right? They happen very, very quickly. That is your altcoin season. That is your altcoin season for each of the respective cycles. That was 2017, that was 2021, and now you're looking for a similar type of drop. So to give you some perspective, when you do actually focus on this and you actually have a look at, the size of the move, the size of the drop that you have in each of these respective areas, and we can probably bring that up over here. Let's use a price range over there, and let's just lock that out. So there we go. If you look at the size of the drop over there, look at the size of that drop. Massive, right? 63% drop, one of the biggest altcoin seasons that we've seen. Look at the size of this drop, right? 46%. So the question is, are we going to get lower and lower drops, right? If you do go back to the bottom of the trend line over there, you're looking at about a 35%, right? So 63, 46, maybe you get 35. The point that I'm trying to establish over here is, if you're worried that you've missed the entire altcoin season and that there is no altcoin season, it's not coming, just to give you perspective, we've only dropped from top to bottom 10.7%. Again, I want to remind you, versus the 63%, versus the 46%, we've only dropped 10%, right? So we haven't seen anything yet. So spot positions are the way to go. Remain patient. Don't get too greedy. Leverage is for, low time frame traders and greedy high time frame traders, right? Greedy people get wrecked in the markets. If you're trying to load up on these giga leverage positions for massive drops over here for an altcoin season, you're probably going to get a bit hurt, right? But we are looking at this on a low time frame. So that's what we want to see. Could this rejection be here the move that initiates that, as mentioned previously, 60-ish% drop in Bitcoin dominance, or 40-ish% drop from the last cycle? Maybe we get something similar this time, right? Okay, Bitcoin has obviously overextended pretty far from the 21 weekly exponential moving average. If we do get a sudden drop, and I'm going to show you one sign that I'm looking at on the daily, that's a little bit of a bearish signal, but it can be negated, right? But if we do play out the downside drop, you got major support at $80,000. Personally, I don't even think that you get there. I actually think most of the demand will come in at $85,000, and you'll probably narrowly miss that major support. But percentage-wise, down to $85,000 is a 17% drop. And if you go the full send all the way to the 21 EMA, you're looking at about 23%, right? 23% over there. Now, the one bearish signal that you do currently have present is bearish divergence, right? You do have bearish divergence. This is triple bearish divergence, which makes it 3 times worse, right? Because it's triple. No, I'm just kidding, guys. It's not 3 times worse, but it is triple bearish divergence. You have your RSI trending down 1, 2, touch point 3, and we're starting to reject. You have high lows 1, 2, and 3 high lows. That's your triple bearish divergence. You have lost the pivot level below 105,296. It is a warning sign, but it's not a death sentence, right? If you do get that drop, as mentioned, it's probably going to be a quick flush. If you get something like that, 85, put the high low in off of low volume apathy within the market during December time period, and then run it back turbo, right? Is this reason for you to sell all of your crypto? Absolutely not. I remain in the market 100%, because despite a bearish divergence, what comes above that, right? There's priorities over here. We have a list or an order list that we have to look at things in, a sequence of priorities. And the priority is, number 1, strong trending moves, right? So strong trending moves, we'll put a T there, ST, strong trending moves. This is a strong trending move. that is above everything else. Then after that, if you're not in a trending move, your next thing that you look at, number 2, is going to be strong horizontals, right? So H for horizontals, your strong horizontals are coming down around that 85K level. And then just below that, it's going to be that $80,000 level. Those are strong horizontals. That is where your support levels remain. And as long as you're above that, it's bullish. If you start to lose that, it's bearish. So therefore, you have one tick in favor of the strong trend. You have one tick in favor that price is above the strong horizontals. And then, a distant third, you can put in order the rest of the things, right? Things like divergences, things like diagonal trends, right? If you have diagonal trends, uptrends or downtrends, you can put in chart patterns. So if you're seeing bull flags and bear flags, all things like that, that comes last in the sequence of events. Remember that trend rules everything, right? Nobody is above the trend. Everybody who thinks they're above the trend ends up getting wrecked. And an easy way to gauge that trend is using our EMAs. The 9 and the 18 exponential moving average price perfectly tested into the 9 exponential moving average and is theoretically holding that as support, starting to bounce. But it is a bit of a pressure cooker that you're seeing within the market right now. Remember, we said that everything is on a knife's edge. The bullet train example that I used being on the tracks, right? In order for the bulls to keep the train on the tracks and continue to pump prices higher, they immediately need to see these levels reclaimed, 105,293, and then see that continuation onwards and upwards. And then going back to this tweet, I think we do need to get a little bit cautious when we start to hit around that 125K level, because relating to what we saw in 2017 and 2020, we got big corrections when we got to those particular points in time based on overextensions, also based on the timing points within the cycle, right? Somewhere between January and March. So we'll keep an eye out on that, right? So that's your Bitcoin dominance. That's Bitcoin over there. A little bit of a long story for you guys, but nevertheless, hopefully valuable. The other good news that we have in the very short term, some little bullish hopium for you, is that you perfectly tested into Monday's low, perfectly tested into the previous week's high, and you've now officially partially filled that CME futures gap, right? Remember, we spoke about this gap over here. There it is, the little gap we drew it out previously. You filled it, right? You've hit the gap over there. You pretty much tagged the previous week's high, and you're holding that as support. So maybe that was the flush. Maybe that's it. Maybe, anyone that's watching the show 5, 6, 7, 8 hours from now, price may already be up here, right? We may be running into FOMC and have continuation. Where do you get a little bit cautious in the short term? Well, of course, if you start to lose the previous week's high, right? If you start to gain acceptance below the previous week's high, something like this, underneath that futures gap over there, a little bit of a rejection, gaining acceptance, deviate, then that's where you start to initiate the flush, the bearish divergence plays out. Remember, going back to the previous chart, trend is the most important thing, and the trend is up, right? The trend is up over there. So I hope that really helps you. We'll go through altcoins. We'll go through a few more things. If you're looking for a place to trade, probably my favorite exchange out there, guys. Reminder, you're getting a big sign-up bonus over here, 50% cashback. This is a very unique opportunity that most exchanges don't offer. It is Blowfin, right? Blowfin over here partnered with us, giving you 50% cashback. You have 57 days left to do this. That means all your trading fees, right? You will be getting money deposited directly back into your account based off of the fees that you generate. All exchanges charge you fees, every single one out there, and they'll actually give you that money back, 50% of that money back, deposited into your account in the form of USDT. This is not a USDT trading bonus. This is actually money that you can withdraw. You can withdraw it, the USDT, straight into your bank account if you do want to. And the beauty of Blowfin is there is no KYC, right? Know your customer. You just put in your email address, create a password, and that is it. You're in, right? And they've got a lot of trading pairs over there. So there's a link below. The double benefit is if you do sign up to Blowfin, remember, you can come and guess what the price of a Bitcoin will be. And the closest guess by the 1st of December, or the 1st of January, excuse me, will win a full Bitcoin, right? You can win one entire Bitcoin valued around $100,000. I don't know any other place that's offering such a massive, massive prize over there. So you can become a whole coiner, right? That is Blowfin, right? That's Blowfin over there. Let's continue. Let's continue on over here. The other thing that I want to have a look at is the deltas, right? Now, Bitcoin's holding a relatively positive delta, meaning that there are still some longs in the market, but there is heavy shorts in the market right now when it comes to Ethereum, Solana, as well as many of the other coins that are out there, the altcoin sector. And that's why you're seeing prices go down. Now, we spoke about this yesterday, and we said this always creates the possibility that you see a bit of a short squeeze, especially when price is coming into major support. So all you need to do is you need to go and look back at your favorite altcoin and ask yourself, are you above a level or below a level? What is a level? A level is an area of support or resistance. If you're above support and holding that support, while simultaneously you have these negative deltas, meaning trying to short support, that's usually a bad strategy. There's always a chance that you might get a bit of a short squeeze and a bounce out of that area. So let's actually go back over here, and I just want to see with a quick refresh on the long to short ratio. So currently about 51-ish% short versus 49% long. It's not too heavily skewed. It's kind of average, but very, very strong negative deltas over here on Pepe and especially on WIF, right? If you look at WIF over here, it's getting absolutely hammered towards the downside. So watch for a potential opposite reaction with a big spike up, just a short squeeze. If that short squeeze results in a lower high on the price chart, then you go down again. But inevitably, you are going to get a little bit of a spike over there. Leverage is being flushed. They're going to get flushed even further. How many more times can they be flushed? That's the question, right? It's already pretty flushed to me, showing that a lot of people have been hurt on leverage. This typically does happen before the next big move, because the aim of the market maker is to punish the leverage and not allow them to participate in the next upside move. Imagine you're a leverage trader and you're trading with your whole account and you basically get flushed out of the market, not once, but twice in a row. Are you going to try and long for the third time, which is where the real breakout move probably does happen? You probably won't. So it's all a game of psychology. Flushed once, flushed twice. Third time, price pumps. They say, oh, my idea was initially correct. They jump into the market, and then Bitcoin hits that 125, 130K, and they jump back into the market and then flush for a third time, right? Never come back to crypto. That's usually what happens, right? So we are seeing a drop over here. We can visually depict this on the chart. You can see the massive drop, right? Look at the funding rate average close over there is very, very low. It's unbelievable. The reason it's unbelievable is because this is an enormous divergence, right? An absolutely enormous divergence between price, there you go, price putting in higher highs and the leverage getting lower and lower. Now, we do need to, it is something to be careful of. I don't think that it's the end of the cycle kind of stuff, but we haven't, because we haven't taken out what we saw in 2021. We expect higher than that, right? The reason that I say that is because, well, if you look at this, you got that divergence over there as well, right? So there it is, higher highs and lower lows over there. There were big divergences back in 2021. But the reason I'm not too scared or worried yet that this is like an end of cycle kind of signal over here, what we saw in 2021, is because I'd expect this to occur at much higher levels than what we saw back in 2021. We haven't got close to that, right? 2021, most of those candles were putting in 0.10 on the funding rates average. Right now, we're on 0.0048, right? It's significantly less. We can actually check as a percentage how much less it is. There we go, give or take. This is about, it was 2,200% higher, the funding rate back in 2021. And we expect to go beyond that. Same thing as this, right? We expect the volume to go beyond that. So I'm not too fearful yet. I think across this level, ETH breaks all-time highs. Bitcoin dominance is falling like a stone. We have ETH BTC leaving the falling wedge. Those start to become the warning signs. And that's where we start to get really, really cautious within the market. I don't think that's the time yet. USDT dominance, still holding the downtrend, but we need to see some more lower lows and lower highs. This is mostly just chopping about. I do want to be very, very careful that this doesn't break back above this resistance line. That would be a very, very scary sign. That would probably mean that, yes, maybe there is a major top in, right? If you saw something like that. We don't have that yet. Of course, just keeping an eye out on it. We'll just continue to watch and simply just monitor this, right? Okay, we'll go into, some of the altcoin requests as well. Total, we spoke about this. This is essentially your final buy the dip opportunity, your order block, your last safe entries. basically coming into strong support, broke the diagonal, you're clearing resistance levels, and therefore did you gain a level or lose a level? You're gaining a level, right? You're holding above an important zone, and your next key level to take out is 460 billion on the others chart. Others is your total cryptocurrency market cap, all the altcoins on CoinMarketCap or CoinGecko, subtracting the top 10, which are generally the highest market cap. So it's looking at a weighting of the lower cap coins, which shows where the true risk is, right? It's a good indicator because we know that risk moves further down the risk curve as the cycle progresses, right? So initially people buy Bitcoin, then they move that Bitcoin into Ethereum, then Ethereum pumps, then they move that into larger caps, and then eventually they move it into what this chart would represent is others, right? Others is the rest of the altcoins, medium caps and low caps. You move into that, and that's kind of your final phase, right? So again, caution can be warranted when we start to break above this level 460 and we're in a strong trending move over here. That's where we stop allocating and we look to profit take. So congratulations if you are here, because at least you're one of the chosen ones, right? For this cycle, you're probably going to make it. You're probably going to make it. So congratulations to you. We're going to have to change our messaging when we are trading up here. I don't know what we're going to tell these late guys. I think they're going to get rinsed, but it happens every cycle. It is what it is. They'll have to live with their own decisions. Okay. Quickly looking at Solana, which has obviously been getting a little bit hammered over here. Still same thing, right? I do expect that this is going to be a high low, and that's just before the next major move up. Similar to what we said on Ethereum, similar to what we said on Coinbase stock, this is also pretty safe, relatively easy, 100% move just to get to the top side of that trading range. And if you're bearish on Solana, just remember fundamentals tend to win over time, right? Maybe not in the short term, in the day-to-day price action, but over time they tend to win. And if you look at this from Justin Bonds, right? Sol's breaking new records today with usage topping out at a whopping 1,511 true TPS. And this is more than all of the chains. If you combine all of them together, Solana is still doing more transactions per second, right? Which is absolutely huge. Real usage, we know a lot of the real usage came from the exponential rise of meme coins, but nevertheless, it's there, right? One of the biggest utilities for crypto is arguably the stablecoin market, which is a quadrillion-dollar asset class. And if you could move that on-chain, well, Solana would look like the obvious pick to solve something like that, right? So that's a use case in its own right, believe it or not. So he says, even if we deducted for consensus transactions and failed transactions, Solana will still, even then, come out on top, right? For the most transactions per second, which is huge, right? Very, very big. Hasn't been shutting down for quite some time. Remember, it used to have all of those things in the past where it would go down often. We haven't seen that, right? So that's all a good sign. So here it is looking at Solana, choppy price action, but nevertheless, the trade remains the same, right? There is your trade. Now, I'm trying to remember, why do I have all of these white lines over here? Let's actually delete them. I think this was part of a school lesson where we're trying to talk about scaling into the trade. I'll delete that to clear it up. Now, this could come a little bit lower as per the little drawing. You could hit that 50% level, which means Solana down to 187 is a possibility. Remember, you are in the oversold territory. Your momentum oscillator is slowly beginning to turn. Let's actually quickly see what it looks like on the 12-hour over here for Solana. Okay, also oversold over there. Let's see the 8-hour. Any major divergences? Not there on the 8-hour, on the 4-hour. And then we'll just look quickly on the hourly. So you're getting small bullish divergences over here on the 4-hour time frame. Let's see on the hourly, anything of interest. And then we'll also look at Solana versus Bitcoin, right? Why is this one taking so long? There it is. Okay, we had a little bit of bullish divergence. Okay, so let's see if the money flow can start to turn up over here on the hourly in the short term. A lot of oversold signals. You're looking for something like this, right? You're looking for something like this. And now you want to turn the corner over there, showing a shift in momentum, bullish momentum. That's in the short term for Solana. That's your hourly chart. We'll go back on the daily and then just having a look over here. The same thing, right? So on the daily, you want to see Sol BTC essentially doing something like this, right? You probably go up, come down over here with your momentum oscillator, create a high low over there, maybe get some blue buy signals just like previously, price has hit the range low. If you start to lose this range low, gaining acceptance below, that's a big warning sign. You haven't seen that yet, right? You haven't seen that yet. Based on the next spike up that you get anyway, if you do bounce from this level and you put in a lower high, that's where we can reevaluate that. Maybe it is going to go lower. Otherwise, are you at support or at your resistance? Or are you at resistance? You're at support. This is major support, right? Okay, so those are your lower targets. Lower targets, remember, that is a possibility. Moving back down into this 187, that is a possibility. It's a real possibility, but chances are it's still going to be reaccumulation, and then you're going to look at higher prices later. So we can have a look at some of the others. 𝗬𝗎 is still looking very strong, right? You are getting a little bit of an overbought signal over here, but these things can continue for longer than you can believe. Remember, the first and foremost thing that you look at in a trending move is the trend. And the trend is your friend till the end of the trend, right? High highs, high lows. Here's your invalidation below $3.42. You don't want to drop below that. So continue to maintain and hold those levels. That's going to be very, very important. Casper should be at mid-range. Let's have a look. Okay, dropping mid-range. It's losing mid-range. So you definitely want to see the reclaim, right? Casper needs to reclaim over here. Get back inside the trading range over there. Failure to hold that could cascade Casper down to about the range quarterly, which in that instance is going to be 12 cents. So again, the speed train analogy. Speed train on the tracks. It's on a knife edge. You're turning a corner. If it derails, things get bad, right? Things get bad very, very quickly. But if bulls can hold it on the track just a little bit longer, we're on a corner, it's turning, and you're on a bullet train. And if you can make that corner, we're going to go on a straight again, right? And then I think we're probably not going to make the next corner, to be honest with you. We're going to be on a straight, things are going to go higher very quickly, and then the next corner we probably derail. So you can look to get your parachute and jump off of that train on the next straight if we make that straight. Let's keep an eye out on that. So level to level, right? Level to level. I hope that analogy really helps you guys grasp the concept of the way that these bull runs work. I see you guys are shilling Goku. Yes, guys, we know Goku is doing very well. It's still doing good, right? We can have a look at the chart. Unbelievably holding up despite what the rest of the market is doing, sitting at $14 million market cap. This is super powerful. If the market does bounce from here, you're going to get a huge move. Maybe you're creating a bit of an order block over here on Goku within this level, just grinding underneath, of course, that 7 or 0.017 cents region, prepping for the next breakout. Possibly, if the market turns, I would expect that to take place. I would expect a rapid and massive incline through this level over here. So we'll keep an eye on that. Doing good. Let's actually quickly look at BirdDog, one of our other low caps. So BirdDog and Goku had been trading, at the same market cap, neck and neck. Goku's holding up better than BirdDog, but BirdDog's still doing decently at 12.71 million over here, holding this level. This is the same thing, similar to my drawings yesterday. That's what you want to see. Just form a bit of a trading range now between, these wick lows and the wick highs over there, 3770. Hold that level for a couple more hours, because this is a 4-hour time frame, maybe into the weekend, and then you can start to break out. Very, very important FOMC today. I don't know if I want to waste too much time going through a lot of altcoin charts, because at the end of the day, it's all going to depend on what happens at the FOMC, right? Now, it's expected that they're going to cut interest rates by 25 basis points, but remember, the real alpha is in what happens in that FOMC statement. I'll update you all. I'll let you know as well, of course, in the Whale Room Discord. A lot of our Whale Room traders are absolutely crushing it, by the way. Killing it over here with massive, massive profits. Some guys catching the short trades, 77.91%. But, most of them sticking in line with the trend on long trades over here, doing phenomenally well. Guys, remember, if you do want to jump into Whale Room, actually spoke with the team and we extended yesterday's offer for yet another 20 people, because all of them got used up very, very quick. So we had people emailing us. If you do want to participate, we're giving you a 35% discount, right? 35% discount off Whale Room. You have to use this code, 𝗥𝗎𝗓𝗓, right? Go through, click that link, type in 𝗥𝗎𝗓𝗓. That should qualify you. It will give you the 35% coupon and add that to the discount savings. It's limited to the first 20 people. First 20 people that do it, you'll get that 35%. I don't know if we can extend it yet again. We've done this twice in a row now. Today's the second time. And then again, guys, reminder, Blowfin, you are getting that cashback opportunity. Take advantage while it's still there. You know, even if you had signed up on a previous link, I still think that you are eligible, right? I still think you're eligible. So let's leave it at that. We'll see what happens later today. I will update you. Thank you all so much for joining. Appreciate each and every one of you. Also, subscribe to this channel if you're not subscribed. Put the bell notification on so you know when we are live here. I'll catch you all on the next one, guys. Have an absolutely lovely day. Cheers, and see you on the next one.